All right, hello everybody. Hope you want to take a look at GameStop, which I guess you probably do, or else you want to be checking this video out. But my name is Mark. I am the stock market jobber, and I got a lot of experience in the trading here. I was brought into the industry by the great Mario Gabelli. I traded directly for Steve Cohen. I've been the head trader of three different investment managers. I was a market maker. I oversaw the trading of probably about 12 or 15 different hedge funds. And so I'm someone who there's pretty much not too much I haven't seen. So make sure you check out our site, stockmarketjobber.com, and join our community. We put a lot of trade ideas on the site that are not on the YouTube page. I'm also known as Professor Mark of the Benzinga Trading School. So you may want to sign up and learn more about things there. So anyway, let's just talk about. Oh, and let us know too if you want to if you want to get subscribe, make sure you subscribe and get push notifications. All right, let's just do something quick here on GameStop because I know it's a popular stock and I'm not going to give a recommendation. Well, I guess it's an implicit recommendation. I think there's a good chance this little bit of a rally has run its course. In other words, I think it's going to run into resistance, and I don't know if the stock is going to go higher. At least, I mean, I don't know what's going to happen in a week or two, but over the next few days, I don't think it's going to move higher. And let me tell you why. See down here, it reached what could be a resistance level. Now, here's the interesting thing, right? Support levels are where markets find a bottom. Support is a level or a price level where there's more than enough buy orders or demand to absorb all of the selling. When a stock's going down, like GameStop did here and GameStop did here, it's because there's not enough demand or buy orders to take in all the sell orders, so the sellers have to offer their shares out at a discount to bring buyers off the sidelines. When we get to a support level, the dynamic changes. There's enough buyers or buy orders or demand to absorb all of the supply. Now, sometimes when a stock eventually falls lower than what was previously a support level, that level can become resistance. Now, why does that happen? Why does a level that was support seemingly to magically become resistance? The answer is buyer's remorse. All right, there's a lot of investors who bought, or a number of investors who bought GameStop here, and when it went up, they thought they were kings and hedge fund gurus and blah blah blah. But then the shares went lower. Now, a lot of these people that bought here decide they made a mistake and they decide to sell and get out, but they don't want to lose money. So they decide to place their sell orders at the same level that they had their buy orders. Now, resistance is the opposite of support. It's a level where there's more than enough sellers or sell orders to fulfill all of the demand. When a market is moving higher, it's because buyers can't find all the shares they need, so they need to be willing to pay a higher price or a premium to the market to get sellers interested, and that brings the sellers off of the sidelines. That they need to bring the sellers off of the sidelines. But anyway, the fact that they can't find enough supply or sell orders, and I use the terms kind of interchangeably because they are, demand is buy, supply is sell. The buyers have to be willing to pay a premium to get sellers off of the sidelines. When we get to a support or resistance level, the tide turns. So at the resistance, there's enough sellers or supply to fill all the demand. Now, why would a level that was support, like here, become resistance? That buyer's remorse, right? People bought, the price goes lower, a lot of them regret it, they place their sell orders at their buy price. If there's enough of these sell orders being placed by remorseful buyers, the level that was support can convert into resistance, and we can see that here. Now, let's go to where we are now. This level was support back in March and May. It was support, and I think there's a good chance it turns into resistance for the same dynamic that happened up here. Buyer's remorse. There's a lot of people who are long GameStop that wish they weren't, and they want to get out of it. So they're going to be placing their sell orders at their buy price. And if there's enough of these sell orders, the level will convert into resistance. So that's where we are now, and we even got there today. And I guess it's probably around 20, and that makes sense because A lot of investors like to buy or sell. Investors, traders, they like to buy or sell at nice round levels. And what's a nicer, rounder level than 20? So I guess that's our lesson for tonight, right? A support level can become resistance. Another thing here before I get going, all right, just look at this. This is what we call market memory. A level that was resistance can stay intact for a long time. So back in probably March or April, GameStop got up to around 47, 47 and a half. And it, for whatever reason, the sellers overtook this or overpowered the buyers there. In August, it got up there again, okay? So there was resistance at a former peak. That's what we call market memory. Why does that happen? Well, there are investors who bought up here who regret doing so when the price goes lower, and they tell themselves they made a mistake. If they can get out at break even, they're going to. So they place their sell orders where they had their previous buy orders, and if there's enough of them, we get resistance. So there tends to be resistance at former peaks. Now look at this. This is the exact opposite. Support. There tends to be support at former support levels. So what I'm trying to say is this, right? The most important thing, and I'm talking about someone who was in trading for a long time. I mean, I'm kind of out of the game now, but because I'm focusing on teaching. But I can tell you firsthand that in the institutional trading world, things are probably a lot different than you think they are. It's not as complicated as most people make it out to be. The good traders that I've known over my career are the people that understand these basic principles of how certain price levels are more important than others. What's the momentum? What's the trend? Investment psychology. Just go over and check out our market lessons page, and you'll see at stockmarketjobber.com. So we have support, resistance. So there's a good chance that we're going to see resistance here, and I think we probably will. I mean, this was just a little Reddit rally driven on nothing. So make sure you check out our site. Hopefully you'll join our community. There's a lot of things on the site that are not here, but I just hope this little trading lesson here on GameStop helps you out. All right, everybody. Thank you. I'll talk to you soon.